Hey guys, welcome back to the channel. My name's Joseph Graff, and today I'm going to be giving you all an update on my Robinhood and M1 Finance portfolios. This is my fourth video in the series that I've been doing where I give you all weekly updates on my portfolios. And so far, I've been pretty happy with the results. And in this video today, I'm going to show them to you. So without further ado, we're going to jump into my Robinhood portfolio. Alright guys, so here we are in my Robinhood portfolio, and I'll start with the chart for the day. And so for the day, which I recorded this video on Monday, I am actually up about 0.1% here, as you can see. Over the past week, I'm up almost 2%. Over the past month, I'm up about 0.3%. Over the past 3 months, I'm actually down 2.7%. Over the past year, I'm up 8.8%. And all time, I'm up 11.47%. And as you all can see, I'm actually kind of getting closer to my all-time high. At my best, I was actually up 14.72%. Since then, the markets have been a little rocky. I do think over the long term they are going to continue to go up. It seems like we've been talking about fears of a recession forever now, and I guess this past week there was some good news where the U.S. actually reached a partial trade deal with China. To tell you the truth, I'm not entirely sure what that will mean for the market. A partial trade deal is not a full trade deal. It's never been completely obvious whether or how much of the trade sanctions have been priced into the stock market. So we're just going to have to see where things go in the following weeks. I do expect for the next couple of months we are going to continue to see some volatility where we're not really too sure which way the market's going to go. To some extent, I'd argue that we've seen quite a bit of volatility this past year. We've been down, or my portfolio has been down as much as 10 or 11%, and I'm actually up 8.8% right now. So, like I've kind of said in the past, it's just one of those things that you have to understand that it comes as a part of being an investor. Anytime you hold investments for a long period of time, you are going to experience some changes in the value. They're going to go up and down. And, hopefully, over the long term, as long as you pick good investments, they're going to go up. So like I've talked about in the past, if you don't have time to pick stocks, I'm a big fan of investing in just a Standard & Poor's 500 index fund. So that being said, we'll take a look at a few stocks in my portfolio. There's nothing that has made a drastic change over the past week or so. We will take a look at Chegg because Chegg does seem like it's starting to go back up. I talked about it in last week's video, how it had taken a big hit. It had gone down 27.5% over the past 3 months, and over this past week we actually had a nice little recovery where it's going up 6.5. It's gone up 6.5%. So I'm pretty happy to see that. I hope that the trend continues upward. If you all look at this 5-year chart, you all can see a nice steady growth. It's going up, and then all of a sudden it takes this big hit. That was right after they announced their acquisition. So like I said, I think Chegg's a good stock. I'm going to keep holding it. We'll scroll down here. Waste Management is still one of my favorites. It has actually gone down a little bit recently. Not as bad as Chegg, but overall, I still really like the stock. Something I've been trying to keep in mind lately is, what is a good sell point for some of these stocks? At what point do they become overvalued and should I sell them? And this is tough for me, especially for some of the companies that I really love, like Waste Management, because to tell you the truth, I'm not really sure what is too high of a price to pay for Chegg or too high of a price to own Chegg at. Now, I will go down and I will show you all actually what I did do over this past week. I actually sold a share of Apple, and that's just because I think it's gotten or not way too high, but I think it's gotten pretty high. It's just past its all-time high. I do think it's a great company. They have a lot of great things going for it with the new Apple Pay. They got that Apple credit card that came out. It sounds like they're going to get into the streaming game. They just announced they're going to release a new iPhone next year that's like around the $300, $400 range. So they're kind of changing their model from a model that sells physical products like iPhones, iPads, Macs, stuff like that, into a company that sells services such as their Apple Music. They offer iCloud storage, and they have all sorts of subscriptions. So that's kind of what they're moving towards. Now, with Apple, I am kind of thinking that, part of the reason it jumped up so much is because of the partial trade deal the U.S. reached with China. So I think if, we hear any sort of bad news about that Apple's going to go back down. And if Apple was to go down to, 220, especially 210, I'd probably just buy that share that I sold right back up. And yeah, like I said, I think Apple's still a good stock, but I do think it got a little too high, and so I wanted to take some profits there. Other than that, I don't have too much else to talk about. I did say last week I was thinking about buying some Caterpillar. I have not bought any Caterpillar yet, but what I might do is if Apple continues to go up, I might take that money that I received from selling my share of Apple and purchase some Caterpillar with it, because I do think Caterpillar is a really good stock. That being said, I think I'll go ahead and jump into my M1 Finance portfolio. All right, so here we are in my M1 Finance portfolio, and it's kind of funny. I was just talking about Caterpillar. I actually do own a little bit of Caterpillar in this portfolio, but as I've said before, I own 100 different stocks in this portfolio, and I have about $6 invested into each of them. So not really a significant amount of Caterpillar here. I've talked about this before in previous videos, but what I did is I picked 100 stocks that I like, and I split up my investments into them. So every week or whenever I decide to invest money into M1 Finance, I'll invest like $50, we'll say, and M1 Finance will actually take that money and invest like 50 cents into each of my stocks. So looking at this portfolio, all time, I am actually up 2.78%. $3.68 of that has come from dividends that I have earned. And that's kind of the main focus of this portfolio, is just growing these dividend payments over time. And $6.42 of that has come from price appreciation in the shares that I own. So I'll show you all what has gone on over this past week. So I actually invested a little bit of money this week. I invested a total of about $30. In addition to that, I also received quite a few dividends. I got one from Merck, which is a pharmaceutical company, for 3 cents, AG&C for 5 cents, Illinois Tool Work for 4 cents, WSR for 4 cents, EQR for 3 cents, BEN for 5 cents, and CB for 2 cents. So as I've talked about this before, the dividend payments are small. What I'm going to do is I'm just going to keep investing money, keep saving money, keep investing it every week, take a little money out of every paycheck and put it in here. And, what I hope to see is these dividend payments growing over time to where, maybe instead of, 4 3-cent dividend payments, I'm actually receiving, like a couple dollars, or, one of my biggest goals is to grow this portfolio to the point where I'm receiving enough monthly income to make a rent payment or a mortgage payment on a house if I decide to buy a house in the future. So I won't spend too long talking about this portfolio today. One thing I will do today is I'll go over my best performers and worst performers. So we'll go down here, we'll sort by total gain. And as you all can see, my best performers are Target, Apple, Omega Healthcare Investors, AT&T, and then Sherwin-Williams. And these are just the companies that between the dividends I've received from them and the price appreciation of their shares, I've made the highest return off these companies. So we also will take a look at some of my worst performers, and it looks like it is Cross Timbers Royalty Trust. I'm down almost 33% on that. Franklin Resources Incorporated, Geo Group. I know they have like private prisons. There's been a lot of negative news lately about that. United Health Group is not doing too well, and Pfizer, which is actually kind of surprising. Pfizer hasn't been doing too well. I actually hold some Pfizer in my Robinhood portfolio. And I knew it had taken a hit, but I thought it had kind of bounced back. So yeah, that's my M1 Finance portfolio. If you like today's video, please hit the like button. Please subscribe to the channel. It helps me to keep putting out content like this. And then I guess the question I have for you all today is, what is your favorite dividend paying stock? So put the answer to that in the comments below, and take care.